All right, everyone. Hello and welcome to the PivotBoss Hangout for October 2nd, 2015. I am Frank Ochoa, aka PivotBoss, and it's been a while since I've done a hangout here. I've taken the summer off, and now I want to get back for some juicy trading that's going to be happening here heading into the end of the year. We've called the market great throughout the year, and especially during the summer months, which typically have kind of quieter periods of volatility. But in this case, we were able to really identify some fantastic movement in charts that really hadn't gone much of anywhere throughout much of the year, and we'll get to that soon. But first, for those of you that aren't familiar with me, my name is Frank Ochoa, aka Pivot Boss. I am the author of the book Secrets of a Pivot Boss. I've been actively trading for over 18 years now. I started trading when I was in college, and from there I was hired by a software development firm making platforms for traders, and basically I was in the trading room right there during my senior year in college, and that was a great stepping stone to everything that I learned the rest of the time since, which has been basically being a lead trader in pro trading rooms, developing software and developing artificial intelligence using neural networks, genetic algorithms, so creating these algos and deploying them for managed futures funds. I provided content analysis and trade recommendations for over 12 years on a professional level for institutional and private retail clients. I've been a coach, mentor, trading educator, instructor in various capacities over 15 years, so I've done a whole lot here with regards to analysis and trading in different environments, from discretionary trading, mechanical and fully automated trading experience there, and basically all of those various types of avenues of or niches of trading there have really combined to give me a really great perspective of how to see the market, how to see it in terms of buyers and sellers in an auction market, and also how to analyze it like an algorithm, because I build the algorithms. So having the market being looked at from a human's perspective and also a computer's perspective, and from there being able to extrapolate key levels, being able to identify key levels, so many different things. So what I'm going to do is I'm going to be showing you my October outlook for the various markets that we cover at PivotBoss. For those of you who aren't familiar with some of the offerings at PivotBoss, if you go to pivotboss.com, you'll see various menu items that you can click on across the top here. One of the things that we offer is free content, PivotBoss Hangouts. This is one of them. PivotBoss Commentary, where I write things, education, lookbooks. This is a great free resource for traders. And then we also offer premium content, and my book is available as well, along with a PivotBoss Bootcamp. By clicking on Start here, you'll get a quick synopsis of the various things that I offer, and in terms of what you're able to get. And hands down, and it's my belief that this is the best value that you can get, especially for those of you that are starting off with the book. This is one of the best books that's written for trading. You can actually see just the numerous testimonials I've received on the book from around the world. Traders just so happy with the book that I put out now 5 years ago. It was 5 years last week or 2 weeks ago that I put the book out, and it continues to give me rave reviews. Every single day I get emails from traders around the world. It makes me super happy. We have the boot camp for Secrets of a Pivot Boss, which is a fantastic swing trading boot camp. And then we have PivotBoss Premium, where I offer daily analysis 5-6 times a week, where 6 days per week, where I'm offering analysis, trade recommendations, on-demand trading. There's proprietary tools that I offer. So many different great things. So please give it a look at pivotboss.com. What I wanted to do here was give you my market outlook for the markets and show you how I do things, because I do believe that the way I look at the market really gives a leg up to traders really trying to understand what's happening with price, what's happening in general with price, and which way the market's going. And my PivotBoss methodology, which has been cultivated over 10-15 years of real world developing algo experience, really helped me identify so many different avenues that are necessary areas of interest that you need to both be well versed in and then also experienced in if you want to be a great trader. For example, identifying and analyzing trades based on just pure price activity, just being able to see the high, lows, and closes, right there is amazing. Just understanding those high, lows, and closes of certain periods of time is very pivotal in terms of what the market's looking at in terms of prices and where price could be headed. Secondarily, but not second, is really volume profiling and the analysis of volume flows, how volume plays in a huge important factor in the way price is trading and what happens with regards to price because of that volume, the volume profiling being on the right here. So volume, price, being able to analyze them independently and again together is very important. And then developing price-based leading indicators. And I'm one of the best at developing indicators for traders. These are the PivotBoss pivots that you see right here. And these are the weekly PivotBoss pivots that I created. And it's a very simple calculation that helps you identify the most important price levels on the market on a week-to-week, day-to-day, or even month-to-month basis. I mean, just looking at these few pivots here, you can see this is for the current week. And you can see how the low of the week was right on the 50% expansion PivotBoss pivot. And then, of course, a lot of battles came right off of the weekly pivot range and then again off the previous week's close. This early rejection Monday morning and overnight trading helped me forecast that we were likely going to see a push downward. We saw that move downward. And then once price was able to push back above this previous high here, I told buyers to come in, my clients. I said, hey, 1890 is the area to defend for a shot higher. And you can see how that was right on the money the previous session. So the way I look at price really helps in identifying those key levels and what's going on. So what we're going to be doing here is analyzing the market using the PivotBoss method, which is through price and volume. And then from there, looking at key range impulse ranges as well. So right now, this is the E-Mini S&P 500 futures. And I like to look at the S&P 500 as a bellwether for what's going on. I don't usually use the cash all that much, although I used to. I analyze what I trade. I trade the ES. I don't trade the cash. So this is what I'm analyzing here. But it's a great proxy, and they pretty much are one and the same, in my opinion. So the first thing I want to note is what's happened year to date so far, because I always take a kind of a top-down perspective when I'm looking, when I'm analyzing the market. So I start from a higher level time frame, like a daily or a weekly chart, and then I drill down into the lower time frames. So in this case, one of the things that we'll be looking at is the overall range of the year here. And you can see for the most part, it kind of went up a little bit, went sideways, and then we had the distribution period here. Well, what happened on the recent sell-off is right here. You can see that high price right here. Price went up and then boom, sold off significantly until it couldn't go down anymore. Let me get this calculation out of the way here. I'll hide that drawing. So this is what I call an impulse move. Price went up, couldn't go up anymore, and then just sold off significantly until it couldn't go down anymore, and it popped up. Once it found that low and couldn't go down anymore, once it hits the midpoint of this range, which is 67.5, once it reaches the midpoint of that range, I call that an impulse range now. That is a definitive impulse range. So if I bring back that, that drawing that I hid, I'm basically defining what the impulse move was of this price swing. So here's the point where it couldn't get any higher. That's 2103.75. The thing sold off significantly into 1831 and then bounced back to the midpoint at 1967.5, actually closing above it for a moment. So right there, when that three steps happen, here's the high, here's the low, here's the bounce back to the midpoint, all in one fell swoop. When that happens, I now have a definitive key range to watch out for. And why is that important? It's important because these key ranges now give you levels inside the range and outside the range to use for forecasting purposes. So if I take this off as well, and let's just remove it for right now. I'm going to remove the PivotBoss pivots here. So now you just have a very clean chart here. I can even take off this key level and remove it for a moment. All I have is the impulse move high, which is 2103s, the low 1831s, and the midpoint 1967 half. From there, you have the upper 25%, the lower 25% of the key level. So basically, this is the high, the low, that's the midpoint, that's the lower 25, and that's the higher upper 25. So this has now basically been quartered. That's the upper quarter distribution, the middle upper 25, and then the lower middle 25, and then the lower quadrant. So 1, 2, 3, 4. Now that gives you all the key levels you need to know inside of price. There's also mid points as well if you want to get that precise, which you can. I don't often, but I do on occasion. And now if you get outside that range, now you have important key levels to watch out for as well. This first one is a 25% expansion from the range. So if you have this as a high of the range and this is the low, that's your range now. So 2103 to 1831, if my math is right, about 180 points or so, 100 or 185, something like that, 170. It's late in the day, not doing math, but here's the range. If you extrapolate that range 100% down, you get 1558. So here's the implication. If price can't hold above 1831s and we violate the downside of the range and hold below 1831s, the expectation is for a swift move into 1762 and 1694, followed by a potential to see a continuation into the 100% expansion target at 1558, which would be kind of like an A, B, C, D move. A to B equals C to D. So that's what we're seeing right now. Here's the impulse move, and that's kind of the first part of this whole thing. Looking at price, looking at the key levels. What are the key levels? So these were the key levels that we're watching and currently watching. If you look above price, say this thing breaks above 2103s and holds, well, the expectation would be a move into 2172, 2240, and 2376. So that's how I'm looking at it right now. Now, if we want to break this thing down further, those are the impulse range key moves. Now look at this inside range here. We have this inside range, and you can see price held, the bulls held this inside 25% at 1899. This was a zone where I had buyers, my clients buying this zone. And then once it failed here, I mentioned bears need to defend any pullback for a shot at new lows. If this thing breaks back above 1900, this would be considered a failed range expansion. So this is the range here. If price pushes below and holds below 1900, and then price pops back above and closes above it as it did here, this is failed range expansion. The price bears were not able to gain acceptance below this 1900 level, and instead price had to mark higher here to basically entice sellers to sell. I mean, that's all it did. So price came back, and what I mentioned to our clients over the course of the week here, once we get a break back above, if this is failed range expansion, that would be high odds suggestion that this thing would rotate back toward the top of the range. Because if you fail to see expansion or acceptance below the previous range, then you're likely going to snap back toward the top of the range. And that's indeed what exactly is starting to happen here. Additionally, what I had our traders do here in our PivotBoss Premium commentary here, here's the previous high and here's the midpoint of the session where we closed back above 1900. I said with that pattern that is played out, the expectation now is for a pullback to 1890, the top of the previous range and the midpoint of the expansion range, and bulls will look to defend that level and buy it for a shot at new highs into 1930. And I said 1930 to 1933. Price rallied right into 1929 halves. So that was perfect precision off 1890 right into 1930. The way I was able to do that precision is just by studying price, studying how price behaves, study how bulls and bears behave in an auction market. If this is the high in a downward trending market, the expectation is bears need to defend that high for lower lows. If they don't and bulls overtake that high, then they're going to come and try to make that prior resistance into support, right? It's not this isn't anything that hasn't been told for so long. It's just identifying when the proper circumstances are for this rule playing out, and you can see how it played out perfectly. In this current session, price actually got below 1890, cleaned out some stops, and then closed back against the previous high, closing on new highs. This was a significant reversal session here. So not only did price attempt to hold below 1900 and fail, but now we had what I call an outside reversal session here, where price closed below the previous sessions, or opened and broke through the previous session's low, and then rebounded to close back above the previous session's high. So breaching the low and then closing back across the range and above the high, that's what I call an outside reversal setup, and that usually leads to further strength ahead. So very important circumstances for the way this thing is playing out. So short term, this is implied movement higher. I believe that given the defense at 1890, given the outside reversal we have here, I would say the first pullback perhaps into 1913s to 1910 offers a buy opportunity for a push back to the midpoint of the impulse range at 1967.5, followed by a move into the top of the range, which I have at 1992 to 2000. So I took off that key level earlier. That's 1992. That's my key level. So right now, the expectation is for a reversal back across the range. Okay, that's the short-term implication of the early move in October. Now, what we've seen here is every rotation to the upside has been defended staunchly by bears. You see these rotations here? This is very important. Bulls attempted to hold above the 1967.5, and that's the midpoint of the key range. And when it failed, it became resistance and dropped. Then it became resistance and dropped, resistance and dropped. It tried to hold above it again here, failed, became resistance and dropped. Each of these areas were time and time again, those mornings and the night before, where I said, bears, hey, it's time for you to defend here, 1967.5. And there were great rotations with little to no heat off of those rotations, all because we identified a key level, 1967.5. And for our premium members, they had this level before anybody, because 1967.5 was a level that I put up here on this day where it was the low. When this low came in and hit a low and bounced back, I had already had this level and put that up by the end of the day and said, we need to get to 67.5 to solidify this impulse range. So that was already a key level in our books well before it even hit. Now, how was I able to do that? Again, it goes back to my background of developing and programming and deploying algorithms for trading. It also goes back to my background in just studying pure price and volume behavior, and from there studying auction market theory and identifying participants, the responsive initiative, and seeing who's positioned where, what are those participants attempting to do, and how good of a job are they doing at defending their position. And that's what we were able to do here. Remember, these key levels are all programmed, are all seen by the programs. So if this high comes in and that impulse low comes in, the programs already know that the midpoint of that range is 67.5. So if you sell off first, the idea is that this thing will likely bounce back to 50%, the midpoint of the range. So down here, programs are already programmed to buy this thing and bid it back up to this level. From there, they're programmed to defend this level if the early impulse range was a sell-off. So a bounce, defend it for a move downward. So all of these criteria are pre-programmed. These rules are pre-programmed by the algorithms. And as long as you know the rules, which levels to identify as the key levels, and from there, know how to negotiate entries and exits, you're solid. And that's why our premium members have been getting some of the top analysis and content in terms of levels and trade recommendations. And I've had fantastic emails on my clients just knocking it out because of the levels that I've been able to identify for them. Now, this comes on the heels of basically the market going kind of sideways to nowhere, right? It also comes on the heels of going sideways to nowhere up here for many months. But during this time, I had the key levels that were most important to the market. And then when this thing started to coil here, 2 weeks or the week, 2 weeks before this thing happened, before the sell-off, I had it to my members that you have to watch for a potential distribution event back to 1800 to 1790. Here's 1790, here's 1800. We got to 1831, so we missed my target zone by about 31 points, but that was a significant sell-off of about 150. So we nailed it. We had it early for our clients, and it was all based off of some of the way that that I look at this thing. So short term here. Short term, this outside day for the ES implies further strength. I would say the key level to continue to watch and defend is going to be 1890 as a big time level, and then you have 1910 to 1913 as the short term level to defend for a move into 67.5 and 77, and perhaps as high as 1992. Now, the way that the bears are defending this thing on the top side, look at this. Let's look at a higher time frame here, or more years rather. Let's take a look at a 3-year chart. So here's a 3-year chart of this thing, and when you look at this thing over the course of the last several years, it's been straight up, right? We've had a straight up market, and that's why, again, we've done so well at PivotBoss, because in an uptrending market, you look to buy the pullbacks in the uptrending market. You identify where those pullback zones are, and you just look to buy the dips every time this thing sells off. It's been a very simple market for the most part with that regard. Now, what you're seeing now, however, is once the market got above 2000 here, that's where everything's kind of gone crazy, because after that, the market couldn't really get any traction to go higher. It just went sideways. And if the market is completely trying to see new highs and new highs and new highs and new highs and new highs, but you're not really getting anywhere, that's a lot of bulls getting long, and they're not getting paid. And sometimes what you have to do is you have to go down and knock out the sell stops in order to open up the upside. And so what happened was, this was a distribution phase. It broke to the downside at 2025. We saw a big time move into 1831s. And the first bounces back up to 2000 have been staunchly defended right here. As a matter of fact, if you look at the volume profile here, look at this. LVN come right in at 2013, and you can ride it right up to 2025, 2030. That is a significant area of rejection for the market, for that price. Bears are defending this pullback and attempting to make that prior support resistance, and it's currently working. So on a longer term sense, this thing looks like it has another leg down to go. I know short term this thing looks positive, and I know CNBC today was pounding the drum about today's reversal day and how bullish it looks. One day is just one day, and it does look good, and I do believe that we have another short term swing higher coming. It's already on the way, and I had it marked off of 1890. So I do believe that's 50 points. We're good to the upside here, and I believe we have more to go. But the way that prices have been defended on these pullbacks to 1992 and above 2000 leads me to believe that every bounce up is being absorbed by OTF responsive sellers looking for this thing to go much, much lower. And remember, if we go lower, here's the back end of the impulse range right here. The downside expected target takes us all the way to 1558 if this thing breaks down. I would have high probability odds on 1762 and 1694. There's a 1720 LVN right here, and that is something that I think you should really watch out for, because if we come into this 1720, it was previous resistance, then it was support. I bought it off that area and had a very nice rise at a couple of years ago. This is a big time area in the chart, so I would say we at least have a move into that area, if not a little below, and this could be a significant zone to defend for a retest back at 1830. So right now, this could be significant the way we play out. We could be looking at a short-term move into 2000, followed by another sell-off into 1700, 1720, or perhaps even lower. So this could be a big-time move here. Now, I do believe that this thing is holding. I mean, we could be in a larger distribution mode, because this thing has been trending up for so long, and then finally it can't have traction. It doesn't have traction to keep going higher. Now we've made lower highs. This lower high right here could be the first of several that gets us all the way into 1558, and it could come over the course of the next few months. But I'm going to continue to watch these areas, continue to watch our key levels, because obviously it ultimately comes up to failing to hold above 1831. And if bears are able to defend any pullback in the 2000, you can have points in the trade to test that 1831 for a potential slam into these downside targets. All right, so that's kind of a long-winded look at the ES. I wanted to look at the NQ briefly here just because they're very similar charts. Now, if we're looking at the NQ here on a daily perspective, I've already got the impulse range, very similar to the ES. You have the high here that was put in at 45.70s. This thing sold off day over day until it couldn't go any lower. 39.08 was the low, and this thing bounced right back to 42.40. 42.40. We also had a move into 43.30, which was our previous support turn resistance. So this key level at 43.30 was a level that we had been buying for many months at PivotBoss. Once it went offered here, the idea was for our members to defend it on the first retest, and right there, 43.30 got you all the way into 41.30. That was a 200-point reversal. So we've had that level marked nicely, 43.30. The impulse range gives us a midpoint at 42.40.75. That 42.40 level has been important in the charts as well, and we have a lower 25% level at 40.74. Look how price dropped into it, held it, and then rallied back, closing above the midpoint. Very important. Here's the upper 25% level, 44.07. Look how price rallied into it, saw rejection, and then dropped into the lower 25. We got below the lower 25, saw rejection, and rallied back to the midpoint. This isn't rocket science. It's basically numbers. It's math. That's why I've had great success developing algorithms, because I've been able to decipher the price play and the volume play of the market, how traders are able to use these key levels. And from there, it's only about quarters, right? It's about halving the market, halving the range, you get the midpoint. You do quarters, you get that. You go 12.5% and go eighths, you got that as well. So if you look at this thing and kind of put almost like graph paper over it, you're able to see those major inflection points and how it goes. So this is not uncommon, where you get an impulse range move down, then price chops around the midpoint of the range, all the while being defended at the upper 25 by bears and the lower 25 by bulls. Very, very clear pattern of trade and price behavior here. Now, one thing here, if we grind into the intraday time frame, you see this right here? That's the midpoint of the bar at 41.17.5. The midpoint of that bar that closed back above the previous high. So we had a downtrending market here, and earlier in the week we sold off the first day of the week. Second day of the week had a lower high and new lows, which was right off of the 41.40s. I mentioned that if price pulled back into the previous range, we were actually looking for a move into 59s for an offering, but price went into 44s instead and then sold off. But when price closed back above 41.40 here and above that previous high, the expectation was, I said, look for bulls to defend 41.20. 41.20 is the area to watch for a move back to 42.40 and perhaps back into 43.30 and beyond. And that's exactly what happened. We had a move into 41.20. It actually got into about 41.16, 41.17, and from there rallied nicely all the way back up. We had 2 days of defenses at that area, with the current day being an outside day reversal as well, where the low is below the previous session's low and the close is above the previous session's high. That's a bullish outside day reversal. That implies at least a few days more of upside bullish trending behavior. So again, I would say any pullback, likely into 41.87 to 4,200, offers an opportunity for bulls to defend for a follow through into 43.30 and perhaps above 4,400. Now again, very similar to the ES. After the big slam, every pullback has been offered significantly. So I think on a longer term basis, this thing could be headed for another leg lower still. And if you look at this thing on a longer term basis here, you have some key levels down below. This right here is a major LVN right at about 37.60. We have a major pivot low at 36.80. And then we have the extrapolation points here, where if we break outside of this impulse range, you're seeing movement into the 25% expansion. That's almost a gimme at 37.41, followed by 35.75. That's the 50% expansion. And the longer term implication, if we break down from this range, would be a move all the way into 32.42. We do have a major LVN at 3,300. That's an LVN where you have to have buys ready to go just to test that LVN because it's so significant there, the most significant on the entire profile. I'm not sure if we get a move all the way back to that area, but you've got to have buy limits ready to go at 3,300 just in case. So the short-term play here for October is for a push higher into 4,400. Any failure to see acceptance above that zone again should be faded for a return back downward and perhaps to new lows into 38.08. Now, one thing I haven't shown here is my PivotBoss pivots. So what we'll do is we'll add the, let's go ahead and, wrong one, come down here to PivotBoss pivots here, add that up, say okay. So the PivotBoss pivots here for the month. Okay, this is what they look like for the month. You got the pivot range here. Let's hide this again. So what we're going to do is we're going to hide this drawing right here. And now here are your PivotBoss pivots. For the month, you have the previous month's high, 44.43, the previous month's low at 40.40, okay? That's important. Now, you have the previous close of the month is right here at 41.54. That's the dotted line, the white dotted lines. The previous week's high, or previous month's high, previous month's low, previous month's close. Then you have the pivot range. This is the pivot point for the week, high plus low plus close divided by 3. Then you have the midpoint of the previous week's range, which is here at 42.40. And then you have the distance in the bottom of the pivot range. These golden lines up here are the expansion levels. So this is 25% expansion of the previous month's range. This is 50% expansion. If you go up, 75% expansion, 100% expansion. Same thing on the way down. These are what I call PivotBoss pivots. And they're significant. It gives you everything you need to know to help you study price. If I bring this up and say, hey, show me the last several months of PivotBoss pivots, here you go. Now you have the history of what's happened off of these levels. It helps a lot to have these key levels on the chart because you can see what's going on in the chart and see what the market is really trying to play to. So if I bring up the current month here, you can see the previous month's close, 41.54. That's the white dotted line. Both of those levels defended on the first 2 weeks of the first 2 sessions of the month. I would say bulls need to continue to defend 41.54. And defending this area suggests a move back to the previous month's high, 44.40. So if you're going to defend the previous month's close, the expectation is you're going to hit it to the upside. If this thing fails to hold above the previous month's close, then you're going to see a move into the previous month's low, followed by a likely expansion into the 25% expansion level. That puts you at 39.40. So bulls are defending the previous month's close for a shot into 44.40. Failure to hold 41.50, and that would suggest a continuation likely into the low and perhaps the expansion target as well. So that's how we're looking at this. If we go back and look at the ES with the same mindset here, here's the previous month's close. This is 1902's. And you can see price being defended off that level 2 sessions in a row to start the month. That's an implication that we're going back to the previous month's high as 2011 halves. Failure to hold this level opens up a move into the previous month's low, 1861, followed by a move into the 25% expansion target, which is going to be 1823 half. So that's exactly what we're looking at here. Watch the previous month's close in both the ES and the NQ to see which way we're headed. Short term, it looks up, and then once we get to the top of this range, you could see the tide change and bring this thing back to the downside. All right, let's take a look at crude oil now. Here's crude oil, and crude oil has has been one of my favorites. That this thing has been solid. I mean, the movement we've seen in this thing has been phenomenal. I've been able to call some phenomenal calls, make some phenomenal trades. This downward trending phase here, every one of those pullbacks was at a pivot range, and we were able to call every one of these key ranges. Everything has been phenomenal. You know, the downward expansion from this range, we had it called when this thing broke right here off the 59s. We already had it called that this thing was dropping when this thing coiled up. So this thing has been perfect. I mean, this pullback here, money. If you go back, I believe I wrote about this pullback and sell opportunity with the inside day, the whole 9. So we've had a really great, pulse on this market. And right here, what you see is a sideways trade, 43.54 up to 49.33, but really it comes down to about 47 to 48. And this thing is starting to coil toward the apex of this range. It was wider early on, then it got more narrow. Now it's getting even more narrow. And to me, that tells you expansion is likely on the horizon. Now, when we look at this impulse range, this is very similar to the ES and the NQ that we just looked at, but at the same time, this impulse range starts on the low, 37.75, and rallies to a high first, 49.33. As soon as we hit that high that morning, I had already had our clients with the pre-market report, and then the next that afternoon with the market outlook. I said, okay, if this is the high, you're looking for a move into 43.54, because that's the key move to look for to cement the impulse range. But before that even happened, 1, 2, 3, you see these 3-bar pattern right here? Look at how this bar is inside the range of the previous bar. Look at how this bar is inside the range of the bar before that. That's a 2-day inside day pattern, a double inside bar day pattern. This implies significant expansion. So back when this day was here, I had it to our clients, look for significant expansion regardless of direction. If we go above 40, we're rallying. If we break below 38, we're dropping. It's easy as that. We got above 40, a big time rally occurred. So we were able to enjoy that move. Once this day saw some rejection, the implication, I told our clients, watch for a move to 43.54. That's the midpoint of the range. And I said also, if we hit the midpoint, look for bulls to defend it for a push back up. So this period of a week and a half to 2 weeks, we had calls that were in excess of $15,000 per contract traded in the crude oil alone. And remember, this is for a service that costs $99 a month. It's actually $19.95 for a 2-week trial premium. So we've had this thing nailed, and it all goes back to looking at this thing from a perspective like a computer looks at it, and then from there determining where those algos are looking to position themselves. Once you get back to the midpoint of that range, algos are already programmed to buy it, and that's why you saddle up and you ride along next to them. When this thing comes back, I told our clients again, if we retest, look to buy it again. If we retest, look to buy it again. If we retest, look to buy it again, because they will continue to buy it until proven otherwise. Same thing on the top side. Everything above 47s is offered right now. If you see price hit 47 or above, it's likely a time to sell it. If you see a price below 44s, it's likely time to buy it. That's just the short-term range. But the short-term range has only been over the last 4 to 5 weeks. Now we're likely going to see expansion from this range. And that's going to be significant, because I do believe that we're going to see expansion from this crude oil range that takes us somewhere on a 10 to 12 point move. So we could be looking at a significant 10 to 12 point move once we see a breakout from this range, and it could be significant. So if we break out of 48s, for example, and get a move, I think we could be looking at a move into 60. And you can look right here, 60.91. That right there is the 100% expansion target to the upside. That's right there based off of this impulse range. If we break to the upside, here's your 25% expansion level, 52.70, 52.22. Here's your 50% expansion level, which is 55.12, and your 100 is going to be 60.91. Likewise, on the downside, if this thing can't hold above the midpoint of 43.54, you're going to see a quick move into 37.75 with a scaling point at 40.64. Why do I say quick? Because you have to think of it like a market participant here. If you have bulls that came in, say you're a buyer and you bought some here, all right? Maybe you took some off the table, you made a little money, so you reinvest and buy again here. All right, maybe you took a little off the table and you keep adding to your position at the same time. Add some more, you add some more, you add some more, or you defend and buy some more. Every rotation at this support level creates more and more buyers that came into it. But if they don't start to get paid, the downside stops. They're going to start jumping ship. And with every rotation here on these lows, you get more and more sell stops. The inventory of sell stops starts to build up below. So if this thing breaks below 43.50s, you're likely going to see all of those sell stops trigger, and it's going to trigger a cascading momentum effect to the downside. That's where you're going to see a big time move to the downside, because all the stops will then come out, and all the buyers that were in here long, they're jumping ship now. Same thing can be said on the top side. You have sellers here, sellers here, sellers here, sellers here. The inventory of buy stops are now coming into play above 48s. And if this thing pushes through 48s, you're going to trigger a cascading effect of buy stops that pushes this thing higher into the next upside target. So that's why we're looking at this thing from an either or perspective. This thing is coiling up significantly. We can get a breakout in either direction, and it could be significant. And it really doesn't matter which way. I would say, given the history here, there's a couple of things at play, and I want to make you aware of them. First of all, the history says we've been going down. So that tells you we might have more downside to go. You see that downtrending market, you bump up here, you get a higher high, but you can't hold. You distribute lower, bounce again, you're defended, and now you're holding again. So this looks like it could be headed downward. What I will say is this is what the market's trying to do. Back here, you have these lows, 1, 2, 3. If you take that support level, anywhere in that fuzzy support zone, just call it 44s, and bring it over to the right, bulls are trying to defend prices and keep it above that 44 zone, which was prior support before. This right here could have been seen as a wipeout. Wipe those stops out below those zones, bring price back above that prior support, and now try to defend it. So that's why I have a little bit of an eye toward, hey, this thing, if bulls successfully defend and squeeze this to the upside, we could be looking at a decent move again back towards 60.91, and that'll bring us right back toward prior highs. And it's almost this entire pattern here is almost a microcosm of what you've seen before. So I'll explain. Here's a low and you bounce. Minor lower low and you bounce. Minor lower low again and you bounce all the way back to this previous high, right? So you establish resistance here. Look at what's going on right now. It's the same thing. You know, you get a low, you bounce, you get another little low, you bounce, you get another little low, and now you're bouncing a little bit. If this thing holds, you're likely bouncing back toward prior resistance here on a larger scale of what just happened down here. So I could see exactly what's going on with the market right now. 44s, 43s, right in that zone is where the bulls are defending. I'm still calling it 43.54. If they're successful, they got to get it above 48s. That's it. Right now, 47s have been a death march. Every time bulls have taken price in the 47s, responsive bears have taken it back and dropped it, taken it back and dropped it, taken it back and dropped it significantly. So right now you have equal parties on both sides, and this thing is significant. When we break out, that's why I mentioned, I think it can be a 10 to 12 point move in the direction of the break. That means if we can't hold 43s, if we drop 12 points, that puts us into 31s. So right here, 31.96 is our 50% expansion. So if we can't hold these 43s, look for a quick move into 31.96 with the potential to see a 100% move into 26.17. So those are the key levels to watch out for. The way I see the market, oftentimes those scenarios, one of those scenarios, maybe sometimes even multiple, depends on what happens, play out, because I'm looking at the right levels. And now I'm giving you the exact key levels to look at for these markets throughout the month of October and moving forward. Again, inside this range, it's just chop. I really haven't offered much in the terms of buy or sell opportunities inside this range for crude. It's mostly been at the outer edges, 43.54 and 47s. Inside the range, you can get chopped to pieces. Just wait. Once you see expansion, you're likely going to see some significant movement, very similar to what you saw here. It could be very similar to this type of move, especially at the outset of the price discovery move. So it could be significant. All right, let's take a look at gold futures here. Wow, gold is beautiful. Gold is beautiful right now, especially after our analysis last night and this whole week, to be honest. Let's go ahead first and look at the impulse moves, the impulse move that I am calculating. I'm calculating the impulse move that began at the middle of June on that high. And that high was 1205.7, 1205.70s, and price sold off significantly until it found this low and popped back above. You see, there was a couple of points where I could have said, hey, that's an impulse move. Maybe this is the impulse move low, but it never bounced to the midpoint. Maybe that's the impulse move low, but it never bounced to the midpoint. Maybe this is the impulse move low, and then it bounces back to the midpoint, 1139s. I believe I drew this after this low had been in for a few days, and we were holding because I believed that this was an OTF responsive buyer's signature right here. So you have this low at 1080. You try to hold above it. You can't go anywhere. So then the price drops through it, runs the stops below it, but immediately snaps back. And then boom, starts defending off 1080s. So I had our buyers defending 1080 in this scenario. And I said, with 1080 holding, this is what absorption looks like. When you're looking at swing buyers, large institutions or large, whales that are buying, they're buying over the course of several days, even sometimes weeks. Sometimes they have a lot of inventory there. Every time price hits that area, they're transacting, they're executing orders at that zone, and they're just holding. And once you see the signature over and over, this was a signature as well, and we saw that. The expectation is that you're likely going to see a big time move coming soon because that's a lot of flow coming in. Once we were able to break above 1104.5, I mentioned we're likely going to hit a couple of upside targets, starting with 1139 and ending with 1169. And look at that, 1169. Why did I hit 1169 and call that a level? Because before, it was also a key level that I had from a prior period of time. So we already had 1169 on the books as a key level, and we ran right into it. So this impulse range with the midpoint at 1139 is the key range I'm watching. You can see how prices traded around 1139. You can see here the lower 25% level being defended, and again today. The upper 25% level being missed just a tad because of the 1169s. But here's where things get interesting because earlier in the week, or last week, really here, price pushed through 1139s for the first time in a long time. And this is when I mentioned, okay, that's important. Look for bulls to defend a pullback now to 1139 to 1140, as they did, for a shot at seeing a continuation into 69s. Failure to hold 1139, 1140 opens the door to a move into 1104. That was my analysis and outlook a week ago. So you can see how bulls came in, defended, and held it. And then they failed to hold it, and price went offered through 1139s. Once this happened, I mentioned any pullback to 1139 offers a selling opportunity for a continuation into 1104.5 to 1100. And you can see day over day that happened nicely until we finally got there, and we hit 1104.5 and got a little bit below it, 1103s. So 1100 to 1104.5 has been my target zone for this recent move down, and we hit it. Additionally, I mentioned yesterday, last evening, and I also put out our EOD playbook for it. It says here, 1100 to 1104.5, that's our buy zone. If we reach down into that zone, that's where bulls want to defend for a reversal back toward 1139 and perhaps even higher. You never know that it's going to happen in one day like this, but if you have the key levels, things like this happen more often than not. It just boggles my mind every single time I see this happen. A significant move downward into our key zone, and then a massive rejection and reversal back to 1139. 1139 being the center of the impulse move. That's level to level analysis right there. And that's something that I've been able to provide for greater than 15 years of experience at a pro level. And it's nothing that you can't and haven't already learned just hanging out with me over the last 50 minutes. So thank you all for being here and engaging in this PivotBoss Hangout with me. So short term, after you see such a significant move like this, the expectation is you're likely going to see a quiet digestion day, a pullback into the previous range, given this huge move. I would say a little bit of a pullback, perhaps into 1127, could be a buying opportunity for a continuation into the previous month's high price, which is going to be 1156. So right down here, this is where bulls came in, defended, and got price to hold above the previous week's close and rally it. That right there implies a continuation into the top of the range with a shot to see expansion beyond it. I would call it 1169 to 1172. That zone is the next confluent zone of expansion above. Now, if price hits that area, expect bears to defend and return price back to 1104 half. That's just what's happening right now. If we look at this thing from a higher time frame perspective, let me hide this drawing right here. Now, looking at this from a higher time frame perspective, you can see how price is just kind of traded. It's been a chop down fest. Chop down, chop down, chop down, chop down. This downward trending channel is something you see often. You either see a downward trending chop or upward trending chop. This has been over the greater course of 3 years now, though. But look how wide that initial range was, and then look how it's narrowing now. That narrowness of the range implies that we could be looking at significant expansion ahead. So if you look at something even bigger than this, if you look at something like, let's take a look here and do a trend line, and bring that trend line here, move it like this. Okay, there's a trend line. And then if we bring another trend line and do something like this and bring this one down like this, you can see we now have a range here that's very, very tightly coiled, right? A very clean, symmetrical triangle pattern. And these patterns have a lot of power. Again, what you would do for this pattern is look at the back end measurement of the pattern from that high to this low. That gives you about the distance of the potential expansion to come. You have to clear either the top of the recent most high, which I would call 1160, would get some expansion to the upside. And on the downside, call it 1095s to see expansion to the downside, or 1100. So 1100 on the downside, and you have 1060 on the upside, 1160 rather on the upside. A breakout from this range could spark a huge move in gold. And because we are coiling up on the bottom, we've been trending down, you know, the expectation is a potential downside break into new lows. And that would take us down into, you know, basically 1,000 and perhaps even to 980. Above this range would easily get us back to 1225 with a shot to see 1,300. So this is the major range to watch and trade once we see that expansion. So I would caution you to avoid the chop within the range. But once we see expansion, again, 1160 on the upside or 1100 to 1095 on the downside, that's going to give you some big time expansion phase movement from this issue. All right, so those are the 4 key markets that I wanted to run with you and give you some analysis for looking forward. I do believe that these markets have been coiled up for some time, and it's only a matter of time before we see expansion in any of these markets. I mean, if you look at that gold we just saw, this ES and Q look about the same, and then when you look at crude oil, how significant that tightly coiled range is. We could be looking at some major breakout opportunities ahead. And once we get to those breakout trending moves, you're likely going to see multi-week movement, perhaps even a few months in a row of movement in that direction. So I think it could be huge heading into the end of the year. And the good news is I'm going to continue to do these PivotBoss Hangouts very frequently heading throughout the rest of the year, so that we're up to snuff on exactly what's going on in the market, which key price levels to watch out for, and where the potential trade opportunities lie. Now, if we go back for a moment here, I wanted to, again, bring up the website for a moment. So for those of you, again, that aren't familiar with PivotBoss, you can go back to pivotboss.com. And at pivotboss.com, you have a whole lot of different options here to view content, whether free or paid. The first thing you're going to want to do when you go back to pivotboss.com is, if you go to free content here, here's the PivotBoss Hangouts. This is where you can click on PivotBoss Hangouts. It'll bring up all the Hangouts that we've had here recently. Again, I took a little bit of a break here, but PivotBoss Hangout here for October, you'll be able to go back, click on this one, and rewatch it. Go ahead and share it if you like with your friends and get more people to watch it. Here's a 2-week trial offer. So this is a 2-week trial for premium. So all of that various analysis that I provided, I do this every single day, both pre-market reports and post-market reports. I give the same analysis. I give trade recommendations and everything. You can go here to pivotboss.com/trial offer, and you can read more about the PivotBoss Premium membership, see some of the calls and the types of calls I make, both for swing traders and also for active intraday traders. So I provide swing commentary for, say, hey, here's crude oil. We've been trending lower. If we pull back to this zone, this is where we want to sell for a move lower. And then you see price pulled back to that zone, and that's a move lower. That's a huge move there off of that piece of analysis, and that's what I do all the time. Same thing here, where I'm looking at these higher level key levels. When price pulls back to a certain point, I'm saying buy it for a move higher. Same thing happens. Look at that. Price pushes into that zone and goes back toward previous highs. So I have this for longer term active investors, also for swing traders. I come in here and do what I call RT playbooks, where this is almost like a football X's and O's playbook. I say, hey, this is the primary key level to watch, 40.94. This reversal right here says sell that level. That's your primary idea. Sell it for a push back to here. If price pushes back to here, look to buy it for a reversal back up. That's an RT playbook. And you can see what happens. Price sold off in that area, right down into our zone. Price bounces back toward the highs, but missed our buy zone just by a little bit. But you can see how this thing plays out according to what I see heading into the market that day. So again, I just point out these key levels. Here's your primary sell opportunity back to value. If this thing doesn't hold above that or below that pivot, then you're likely going to see the stops run out. So I give 2 scenarios, a primary trade, and then you see the counter trend trade. Here's what happened. Price came into that level, hit it perfectly right to the button, and dropped right toward our target. Again, that's a big time move there of 12 handles, actually more than that, 18 handles, 17, 18 handles in gold, which is immense per contract basis. So you can look at all these various recommendations and all the various things you get. Additionally, this is something I'm very, very excited about. And it's my first course that I've put out for swing traders in a while. And I've had a lot of swing traders for stocks that have asked me to put out education. And for stocks, especially, and I'm going to be bringing out some stock education and scanning and prospecting opportunities, setups, trade management, entry executions, all of those things. So if you go here to Secrets of a Pivot Boss, you can click on this bootcamp link and get more information about the Secrets of a Pivot Boss bootcamp. And this is the best training that I've put out for outside of Masters, which is my super ultra premier training. But this is phenomenal training. You're going to get the book. So if you don't know who I am or you don't have my book yet, here's the book, Secrets of a Pivot Boss. You're going to get the book. You're going to get 3 on-demand courses that are ready for you at this moment. You're going to get proprietary tools for Thinkorswim and Market Delta, so indicators and signals. You're also going to get weekly training. This one comes with 3 weeks. Every Friday, we're going to get together for 3 weeks in a row and build scans and also prospect for the upcoming week of trading. And this is a lifetime membership. So you pay this price one time, you don't have to pay again. You're in like Flynn, and then from there, every time I host training like this, you're going to get it automatically as part of your lifetime membership. So there's a whole lot of information here for you to look to see what kind of courses we have. For example, executing pro-style entry and exit techniques. I provide 2 pro-style entry techniques, 2 pro-style trade management techniques, which help you negotiate better entries, reduce slippage, and limit your initial risk, and ultimately eliminate risk in any trade. So this is the way that I teach my members, my traders, how to manage and enter their trades so that they're able to get the best entries possible, and perhaps high probability trades are the result. Same thing here, mastering SPB price-based setups. These are 4 important setups here that I have outlined from the book. So this is supplementary and complementary content here, where I'm providing these 4 powerful price-based setups. I show you how to qualify using them. I show you how to enter them and exit them. I give you the proprietary code for them for the Thinkorswim platform, so you actually see these signals on your charts. So there's a whole lot here to like with this new boot camp. And for those of you that really want to hear more about this, first you can go to the page and read more. But secondly, I'm going to be hosting basically a Secrets of a Pivot Boss Bootcamp Hangout next Monday. So it's going to be a lunchtime party, Monday the 6th at noon Central Time. You can check the website. I'm also going to be sending out an email as well, so that if you want to learn more about the bootcamp, learn more about the quality of the content and the types of signals and the types of things that I'll be teaching, you can learn more about it then. It's going to be a quick 20-25 minute spiel there where you can ask your questions, we can interact, and it'll be something that you can play back at a later time. So for everyone at Pivot Boss, I want to say thank you so much for joining me here today. This is always something that I really enjoy doing, being in front of you all and just providing live analysis, because this analysis is something that I believe all of you traders can do and will be able to do, especially with seeing this type of thing over and over again. It's analysis that I truly believe in. The trade recommendations, all of the algos I create, all of these things I make available to my members in some form or another through the various memberships and various pages that I have at Pivot Boss and also at Pivot Boss Masters. So for everyone at Pivot Boss, I want to say thank you all very much for spending your Friday afternoon with me. I look forward to seeing you again next Monday for the Secrets of a Pivot Boss Bootcamp info session. And for everyone again, I want to say thank you and have a fantastic weekend in the weekend ahead. All right, take care, everyone.